it's Roger Sitkins. Here we are in Path 2, Building Knowledge. Today we're going to talk about the 80-20 rule, one of the most important principles, one of those foundational blocks that will truly transform your agency once you know, not guess the numbers. So we're going to be going through Vilfredo Pareto's principle, the 80-20 rule. We'll talk about some predictable imbalance in the universe as a result of the 80-20. Talk about some problems and concerns that I see in independent insurance agencies, and then of course some additional lessons, some things that you can look at to really take that knowledge even deeper. Vilfredo Pareto was an Italian economist and sociologist, and in the year 1896, he did a study, a land ownership study. He wanted to find out who owned the land in Italy. And it was kind of interesting that 20% of the people owned 80% of the land, and 80% of the people owned 20% of the land. And what he really did is he stumbled across the fact that there is a predictable imbalance in the universe. It's the same outcome everywhere. 80% of our customers will generate 20% of our revenues, and 20% of our customers will generate 80. We're going to get into that in depth. 20% of your salespeople will make 80% of the sales. 80% of your salespeople will make 20% of the sales. And everything you do, by the way, 20% of your clients will generate 80% of the complaints, and 80% of your clients will only be 20% of the complaints. It's really everywhere. And I know as I started looking at this predictable imbalance, and I was doing some study on it when I first came across it, I ran across a carpet company in Georgia that was in the carpet leasing business. And they were primarily leasing to hotels and airports and office buildings. And what they found was that as they leased the carpet out, guess what? 20% of the carpet had 80% of the wear, and 80% of the carpet had 20% of the wear. They were the company that invented carpet squares, foam back carpet squares. So when you go in most major office buildings or airports or whatever where there's carpet now, they're really carpet squares because they can replace the 20% that gets worn out and damaged, not have to replace the 80%. I thought it was kind of interesting. Your personal efforts and your personal results, again, 20% of what you do will get you 80% of your results. And I believe that 20% of what you do brings you 80% of your happiness. Think about that, okay? Now, let's look at an average agency's book of business, and by the way, an average producer. Well, we're going to look at three things here. We'll look at the clients, the revenues, and what we call the TP, the time, energy, problems, expenses, and employees. As we've broken this down and done this survey literally for decades now, 99.9% of agencies and producers wind up looking like this. Now, some people will challenge and say, well, I don't think that's my agency. Well, are you knowing or are you guessing? Okay? Well, here's what we know. The A customers, the top 5% of the customers, will generate normally right at 50% of the gross commission income. The B customers, the middle 15%, will generate 30%. So combined, of course, we have 20% that are 80% of the revenues. And then the bottom 80% of the customers will only generate 20% of the revenues. Now, when we start looking at this, and again, we look at time, energy, problems, expenses, and employees, what I see, and this kind of gets back to that 80% of complaints from 20% of clients, but when you look at it overall, only about 30% of the time, energy, problems, expenses, and employees in an average agency are generated up here at the top 20%, and about 70% down here on the bottom. It just creates a lot of concerns and problems. Now, the ultimate goal as you're managing your agency is to get to a balanced agency or a balanced book of business, whereby the A customers, the top 5%, are a third of our revenue. The B customers, the middle 15%, are a third. And the C customers, the bottom 80%, are a third. A third and a third and a third creates a very balanced agency and eliminates a lot of problems and concerns that we're going to talk about. Number one problem and concern I have if you don't know the numbers and do something about it is I think you're vulnerable. If you were to lose the top 5% of your customers, 50% of your commission income, what percent of your employees could you reduce? Well, you couldn't get rid of 50% of the employees and expenses because you still have 95% of the customers left. So I think we're vulnerable in that we have very profitable accounts subsidizing, at least on the surface, unprofitable accounts. So we're vulnerable. Secondly, well, where do our profits really come from? Just looking at that without going any deeper, we could probably say on the surface that our A customers are very, very profitable. Our B customers might be profitable. Our C customers may not be profitable. But when you really dig into it, and some things we'll work on in the future together would be the account profitability analysis, where you can really start doing profit center analysis on the various portions of your agency. I have a concern about client service standards. Now, one of the keys to the better way, and you'll learn this as you start designing and implementing, is that every customer is treated as a VIP customer. Now, that doesn't mean they all get the same level of service. Everybody gets the level of service they've paid for, but we want to make sure that we have A, B, and C customer service standards. What will we do for them? Because unfortunately, in the average agency, the A customer gets grossly underserviced, while the C customer gets grossly overserviced based upon the revenue that they generate. So I've got concerns there, and again, we're going to start designing a model that has standards and has a customer service experience that really solves some of these problems. Some additional lessons. Well, if 5% of the customers generate 50% of the commission income, then that means, as I said earlier, that the 95% of the customers, the remaining customers, only generate 50%. Again, on the surface, might we be vulnerable and might we have some concerns about profitability? I'd say the answer is yes. What about the bottom 50% of your customers? You know, again, I've always looked at this for a long time, and I'll never forget in a private planning session one time, we were looking at this with an agency, and we said, well, okay, what are the top 50% doing for us? What are the bottom 50%? And this got very, very concerning. What we saw back then was that the bottom 50% of the customers in the average agency were only about 10% of the revenue. Today, we see that even less. We see it even less. What about the bottom 25%? Well, originally we'd look at this and say, okay, what are the bottom 25% doing? It was about 5% of the revenue. Ladies and gentlemen, in a lot of agencies today, that's only 2 or 3% of your revenue. But think of all the activity that happens in the bottom 25%. What about the top 2%? What about the top 2%? What are they generating? We're looking at vulnerability and profitability on the bottom end. What about the top end? What I see in the average agency, where we're looking at the A accounts, we call these the super A's. The super A's in the average agency are about 35 to 40% of the revenue. Now again, don't guess. Go in and let's know what's going on. So summary, number one, go ahead and run a book of business report. Go into your accounting system, get a listing of all of your customers from largest to smallest based upon the revenue they generate, not the premium, the revenue, so that we now know some numbers. Once you've run that report, then go ahead and complete your 80-20 analysis. Now, when we do this, we're going to break it out. What are the top 5% of our customers doing? What are the middle 15% of our customers doing for us? And what are the bottom 80%? Now we have some knowledge, and as we're designing our Better Way model, now we can start making some decisions based upon that knowledge. I'll see you in the next tape.